Our Black Friday sale is now available on the website for the remainder of the month. This will apply on the ebook, course and mentorship plans. Private message me on Twitter, links down below for more information, or head straight to the website. Welcome back everyone to another Vechain update. Yes, over the past week we have seen over a 20% move, and that was the reasoning for the other title from yesterday, The Beast Has Awoken, because simply other cryptos in similar market caps of around the 1.5 billion market cap area has not moved as much as Vechain. Of course we've retraced now, but as I mentioned in yesterday's update, for the moment it's just a bullish retest of key levels of support, and I did mark out the Fibonacci's for you guys, but I just added this little box to pretty much show you the level a little bit clearer with a box so you can see the color difference. So the golden lines between the 0.5 and the 6.5 just been marked out for you guys as a key area for Vechain to hold going forward in order to eventually continue higher than the new high that is now created in order to get to about the 3 cent mark. We're going to analyze this in a lot of detail today, so make sure if you haven't already to like, subscribe, comment, share. We're on the road to 7.5k subscribers before the end of this year, and I've also still got my discounts for the last couple of days of the month. So what we're seeing right now is just a nice bullish retracement as of now. This can of course change, this can become bearish, but right now we are still currently above the 200 EMA, and as I mentioned yesterday, it makes sense to come back down to there, as since the reclaim of this level, which again, remember, serves as the bottom of our uptrend. When you do lose it, we're looking for a new trend to start, a downtrend, and what needs to happen over here is a retest of this after the breakdown of resistance and then a continuation lower than this low. And of course that didn't happen. We reclaimed that level very swiftly, and so it becomes support again, but as we didn't really test it as support, that's why we're coming quite close to it again, just to show that this is the bottom of our uptrend. And if this is again lost and we use this as resistance, then the trend is changing. I'll say, guys, we're no longer going up to 3 cent. We're now looking for a dump back down to these lows over here, but that's not the case as of now, as we've got the golden pocket marked out and the level of support that needs to be maintained in order to continue higher and reclaim these moving averages to further state that this is continuing in the immediate short term to the upside. We also need to place a new set of fibs. So going from this low to this high, which was this over 20% move, and that we saw over the past week, which a lot of cryptos again at the same market cap didn't do. So that's why we were saying that, yeah, one of the moves that we were suggesting in the titles, like Vechain is setting up for an explosive move. Now we started that move up, we did break the high, but now is a time for a bullish retest of these key levels in order to continue with these huge gains. So what now needs to happen, as I've now placed a new sets of fibs, it's also showing us that that area is another golden pocket using a separate set of fibs. We can see that where we have come to in today's candles, well, yeah, this is the 4-hour time frame, but where we come to in today's daily candle is a key level of support that needs to be maintained in order to see a break of this high over here, of this range. And what's quite interesting is that in yesterday's update, I said we need to see the 20 holding. Now it did hold a support for the continuation higher. That's what we were suggesting. However, we've seen today's daily candle actually push through this support and tap the golden pocket. So there was a specific reasoning for why, when we did lose it, we came down to this level, which was where previous body candle closes were, which is what we were saying in yesterday's update. So it's nice to see that this has been pretty much forecasted, and now we need to see the daily candle closing back above the 20 daily moving average if we want to see short-term continuation in the upside. That means the next for the remainder of this week going up. So today we need to close the daily candle above 211. Let me just say that again. We need to close above 212 cents, okay? As long as we can close above 212 cents, then we're looking for continuation higher over the coming days. And on the 4-hour time frame, it looks a bit easier to explain. Why? Because we're looking at an example over here where we've lost the moving averages, but this is sitting beneath us, keeping us bullish. So if this is what's keeping us bullish, then bullish means uptrend, and uptrend means higher highs. So that means as long as we're staying above this point, we'll eventually break the high over here, 2.375 cent. And so if this is bullish, then we need to see a reclaim of the moving averages and then the high. So right now we're potentially forming a small double bottom over here. We're not yet actually above the moving averages, but this is the sort of pattern pattern that we want to see at a key level, which is the 200 EMA and the golden pocket, in order to reclaim these moving averages, flipping them bullish again as long as it holds a support for the continuation back up to this high and eventually higher. So the reason why this is quite easy to explain is because in the previous time where we did lose the moving averages, we formed an EMA repel over it, which slung us back above the moving averages. So if they do not cross over, we're going to get slung back above. And that's how we go ahead and invalidate this potential bearish cross, where we could be losing this and changing the trend from uptrend into downtrend, where this will then serve as our top of the downtrend. But at the moment, it's the bottom of our uptrend. And so as we are the golden pocket and at such a key level that must be watched going forward, let's just call it the 2 cent psychological level, which is around down here. Staying above that is going to eventually push us to 3 cent. But when we zoom in a bit and we're marking out new and analyzing and marking out new levels and using golden pockets and moving averages, it's going to give us a bit more detail on the more specific levels that need to hold in order to see continuation to the upside. But out of this whole entire range, it needs to hold above 2 cents, but there's now levels above that point that also need to hold, which is this over here. And as there's a potential bullish pattern with potential for an EMA repel, we need to get slung back above and confirm it as support, because on this attempt, yes, we did break above, but we couldn't confirm it as support. And that's what's resulted in this continuation downwards eventually. And we did actually form a bearish cross. So this over here is a failed bullish cross. In term, yes, we did flip bullish, but we need to see the crossover and confirmation as support. And then that didn't happen. And so in turn, it created a EMA repel, which gives you a slingshot motion. So that's what we need to see, but the opposite way. We need to see an EMA repel, which gives us a slingshot motion to reclaim the moving averages. But on this attempt, we actually need to confirm it as support, unlike this time round for the continuation high. I hope that was very clear to you guys. If it's not, do consider taking action over these next few days on the course, ebook, or mentorship plan. The ebook is down to £20 for the next couple of days for anyone interested, and you do actually get discounts in the future on any other offers that I do have on the course or the mentorship. So yeah, you know that you've got that now on the ebook, so you don't have to specifically wait. Then you don't have to use up the next 2 days to buy the course or the mentorship. If you get the ebook, which is £20, then you have a forever discount in there at the end of the book. So over here again, we just need to simply see this EMA repel forming, hold its support for the continuation higher. What I can then do is actually give you targets to the upside, but there's also going to be a key level in the way before we break this high, which is where we're seeing all these bodies hanging about over here around the 2.265 cent area. So we've also got the wicks up at the 786. So what I would suggest is we need a new golden pocket being drawn on. And yes, I would usually go from here to here, but as we've mentioned more specific levels, we're going to go from this area to that area as the level of resistance that needs to be broken. So 2.3 cents needs to see we need to see that being broken. So it could be a process where we reclaim the moving averages, confirm them as support, run into this resistance where we might get knocked down a little bit, and then push through it and confirm it as support for the continuation higher, close to 3 cents as our technical target eventually. So let's now see this continue to hold our uptrend, form this EMA repel, but unlike this scenario where we fell back underneath, let's confirm it as support for eventual continuation higher. Let me know your thoughts in the comment section below. Don't forget to like, subscribe, and share these videos. And again, I've got a few more days left on the discounts, but one way where you could permanently have discounts is if you take action on the ebook, which is only £20 for the next couple of days, and then you have permanent discounts going forward on the mentorship and course if you feel like you want to do so. Thank you so much for tuning in. Links are down below, and I'll catch you in the community. Our Black Friday sale is now available on the website for the remainder of the month. This will apply on the ebook, course, and mentorship plans. Private message me on Twitter, links down below for more information, or head straight to the website. Cheers everyone.